Straight to Charles Pellegrin for business now. A look today at gold prices soaring to record highs, Charles.
It's the stereotypical safe haven asset, and investors are piling into it right now as we speak. The price of an ounce of gold is above the $4,000 mark and climbing. To give you an idea, a simple wedding band, like the one I have on my finger right now, has somewhere between 2 to 6 grams of gold, and there are just over 31 grams in an ounce, which is over $4,000. And the climb to these new heights has been steady over the past 10 years, as central banks the world over have been buying up the precious metal to fill their coffers, something that has intensified since Western countries slapped sanctions on Russia over the full-scale invasion of Ukraine in 2022. Those sanctions really highlighted the potential vulnerability of countries holding foreign reserves as a haven asset, and this made gold look more attractive since it's not tied to a government or central bank and can be stored domestically. That's why gold is now the world's second largest reserve asset in the world, ahead of the euro.
It's trust in one currency in particular that's been shaken. This is the US dollar, Charles.
And that's what's driven the price of gold even higher in the past few months. The world's foremost currency and reserve asset is increasingly facing a trust deficit, especially since August this year, after the chairman of the Federal Reserve, Jerome Powell, signaled the start of a rate-cutting cycle in spite of low unemployment and above-target inflation. All as the traditionally independent U.S. central bank has been the target of a huge pressure campaign by Donald Trump, who has been calling for steep rate cuts to stimulate the economy. The dollar index, which measures the U.S. currency's strength versus a basket of other currencies, shows a very different trajectory to gold over the past 10 years, you can see there, compared to the previous graph we saw. One that's more volatile and underlining the fact that the dollar has shed value in recent months as concerns are piling up over the independence of monetary policy, the overhaul of global trade because of tariffs, and the mounting public finances woes illustrated by the U.S. government shutdown taking place currently. Increasingly, investors are favoring gold as a reserve asset over dollar-denominated assets, notably long-term Treasury bonds.
So what are the stocks then looking like right now, Charles?
Well, we're seeing the major bourses in Europe opening flat or slightly higher at the open this Wednesday, amid similar concerns over government debt in France and the UK, as we mentioned earlier with regards to the US. And finally, cryptocurrencies have been benefiting from the same trend as gold as well, as they are not tied to any particular government or institution. You can see Bitcoin currently at over 104,000 euros per Bitcoin.
Now, as the current US government shutdown stretches into its second week, economic fallout is becoming visible, isn't it?
From critical data like the latest jobs report not being published to air traffic disruptions due to a lack of controllers, that fallout is taking a number of forms. For some government workers put on furlough by the shutdown, it may mean a severe hit to their take-home pay. Despite a 2019 law that guarantees back pay for furloughed federal employees, the White House Office of Management and Budget is now saying that may not apply to all of them. Brian Quinn has the details.
Airports running at limited capacity, federal buildings closed down. Signs of the ongoing U.S. government shutdown are plain to see, and for some federal workers, it could have a lasting cost. The Trump administration is warning that many furloughed employees may not get their back pay, even when funding is restored.
For the most part, we're going to take care of our people. There are some people that really don't deserve to be taken care of, and we'll take care of them in a different way.
Some 750,000 federal workers have been told not to report to work due to the shutdown. A 2019 law signed by President Trump in his first term guarantees those furloughed workers retroactive compensation once funding is restored. But a recent memo from the White House Office of Management and Budget contends that only those considered essential and thus compelled to report to work are entitled to back pay. The OMB is run by arch-conservative Russell Vought, an architect of the notorious right-wing Project 2025 plan to slash the federal workforce, eliminate environmental regulations, gut America's already meager social safety net, and concentrate power in the executive branch. Trump says the shutdown is playing right into Vought's hands.
But we have a lot of things that we're going to eliminate and permanently eliminate. And you know Russell Vought, he's a serious person, very serious person, and he's sitting there and he's getting ready to cut things.
Republican lawmakers have distanced themselves from the OMB's plan, while Democrats say it's patently illegal. They have so far refused to pass a short-term spending bill unless Republicans agree to extend federal subsidies on health insurance premiums, which are set to double for many Americans next year.
Thanks very much, Shel Pellegrin with Business on France 24. Going to go straight to